that there will be an interest rate hike this afternoon, so your home loan and car repayments are likely to increase. As it stands, the repo rate is 6.25% and the prime rate at banks is 9.75%. Recent data suggests the bank will hike, inflation is up, and the rand has weakened sharply since the last MPC meeting in November. But there are weak economic growth projections, less borrowing, and a further drop in consumer and business confidence, which support the case to keep rates steady or raise them slowly. Citibank's Gina Skuman says the inflation outlook is too far into the upside to ignore.
I think we can all agree that low-income groups in South Africa do not have very strong wealth positions. They've actually leveraged up considerably over the years in unsecured lending. Their job security is not secure when you're facing a potential recession or very stagnant GDP growth. So from that perspective, inflation can be very harmful for South Africa. And I would add, creates a lot of social and political tension, which in this type of environment is not ideal, because I think that's already starting to bubble over. So that alone would usually be reason for the Reserve Bank to hike by at least 25 basis points.
If there is a hike this afternoon, those already in difficult debt will be the hardest hit.
Many people, as it is, when they are buying on credit, and specifically when they're buying assets, they tend to buy towards the upper side of what they can afford. So this potential interest rates hike is going to place a huge burden on them, because if they've already committed themselves to the maximum that they can afford, they are potentially going to be pushed into over-indebtedness.
The risk of a recession in South Africa this year is mounting, making policy decisions more difficult. The bank will be battling to balance the need to contain inflation and support a stuttering economy.
Well, on the back of that,